morning and hello, I'm Professor and this is the Forex Supermodel Racing Review and Forex Briefing for Thursday the 19th of January 2023. Look at yesterday's results then for Wednesday the 18th. We're at Southern on the all-weather at 5:45. It was a three-runner race after a non-runner. Basically we were on the wrong one there. We were on Ray of Colours, which came third, last of the three at 5-2. We got 2.3-1, so about the same. £2 per £8 unit, £200 win. So we lost that. Exposure 0.25 of units, so the account came down to plus 64.30 units in profit from a peak of about 72. So what happened there then? Well, this Naomi Charm won at 15-8, and if you watch the race, it was steaming away. That wasn't going to be beating that horse under those conditions. And what did we say about that? Well, we said, where is it? Needs a quicker surface. Well, clearly it didn't there, but our analysis suggested that. Victory House, we said was gamed and not resolute, and this horse we said was a thinker, and it was certainly thinking, just it wasn't thinking the right thing. So anyway, that was the end of that. Didn't pan out. Racing today is just down to two all-weather meetings. We don't really like them. There's a couple of potential races, one at Wolverhampton, one at Kempton, but they don't really cut it on the odds and the risk return. So we're no betting it today, unfortunately. So we're static there. So, but the Forex was interesting yesterday. If you remember, it was US retail sales at 13:30. And we said there was a window after that into Fed speakers, and you had who was it? Bostic, which used to be known as glue in our view, and also Bullard. Bostic was at 1400 and Bullard was at 1430. Now, what happened there then? Well, you got soft retail sales coming in, so the dollar was sold off even more. It had been soft prior to that, so you had this 1330, and we were looking at the dollar yen. So you got this down spike at 1330, and that was your marker. So obviously the market reacted to the soft retail sales, thumped the dollar yen down. So the yen came up, the dollar came off, and then you had this. So you got this window to 1400, where you got Bostic, and you got 1430. Bullard, and the market started joining in the party, and it started selling off, and it sold off, so what you know then is that this level here is from there on, after the downward spike, is relatively short-term trades. It's people jumping on the bandwagon, running with the negative momentum on the dollar yen. And they're short-term traders. So you've got this overstretched period here, and what we did, we managed to we thought that one of these Fed people from the organisation was likely to open their trap and ruin the party, and by being slightly more hawkish about the dollar, and Bostic didn't say much about that. But Bullard did, and the market was pretty overstretched. It dropped, give or take, 60 points or pips to then, and that was the time just prior to 1430. The market was starting to twitch up a bit, and that was when we put our buy order in, and up we went, and we ended up with about plus 45 pips. And what was happening there? Basically, these bandwagon traders were bailing out, profit taking or running for the hills, and new bandwagon traders were jumping on the reversal. So you had two things in your favour really. Right, so that was what we were looking for. Remember, if yesterday we said that there was this window between after the retail sales and Bostic. Look for something that's been pumped or compressed, and that's where we are. Now these trades are not easy. You have to correctly assess the economic calendar, and B, you have to have a catalyst data print, in which case this was retail sales. It was a tier 1 event, and then you've got to have some uncertainty in a reasonably close window within within an hour, half hour, to have a go at these trades. But they do work out. You've got a lot in your favour. Now if you want to look, we did a video a while ago on trading psychology. I think it's number 3 if you want to look it up. It's called Behind the Economic Calendar. And it sort of talks about the 3 uses of the economic calendar. Now most people use the economic calendar in an operational sense, but there's tactical and strategic. If you want to have a look at that, be our guest. It's there for you. So anyway, that's what we're doing. So that was a useful trade. It's not easy. It's probably easier than doing bounce trades because you really are vulnerable to whipsawing. Whereas here you've actually got some sort of structure to it with the timings and the movements. But anyway, that's where we are. So I hope that was useful to you. The racing, we've had a couple of poor days, to be honest. The analysis has been off, but the stakes have been low, and we haven't done any real damage to the account. And the odds have been low as well, relatively speaking. So no harm done, and no harm, not much good given if we'd won them. So that's where we are. But the Forex is interesting. If you want to look that scenario up, be our guest. And if not, thanks for watching, thanks for subscribing, and goodbye.